The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman here, and we're just correcting a little mistake in the den. I said the tune that was playing by Glenn Miller was In the Mood. Of course, it's not. It was not. It was Little Brown Jug, of course. Okay, so here we go. Dow's up 15 at 21,980. It made an all-time high today in the 22,000s. This is really an important session, and it's just, wow. I'd spent so much time going back and forth with Tommy Jr., Tommy O'Brien, maybe 6 weeks, I don't even know how long ago, to decide when I would do this webinar. I said, the timing has to be right. I would like the candle of July to be complete because it's going to give us so much information. So how about we had one day, then I said, no, you know what, we'll go August the 2nd, Wednesday, August the 2nd, and I'll do a 2-webinar series because what's really important about it is we want to see the follow-through. It's all very well at a moment like this to say, oh, great, that's it, sell everything. No, there's this whole rotational aspect that you've got to keep in mind even now. All the indices are down sharply, yet the Dow, because of Apple and maybe one or two other stocks, is up 26. That's this rotational aspect. As Boeing, which was the incredible leader for 300 points or more, takes a breather, what happens? Suddenly Apple comes along. And that's the nature of this market. How do you trade this and how do you play it? How do you position yourself? That's what this webinar is going to be about tonight. We've already started trying to pick certain stocks that are right at this particular moment have the potential to move higher against a backdrop of maybe a negative backdrop, as well as looking at stocks that are just ready to short. I mean, we picked one today that is down 2 points already. I don't know if it's going to work, but it had all the ingredients we look for: peak D in the daily, peak D in the weekly, peak D, a leg D in the monthly, and a peak D in the 120-minute chart. 4 Ds, what more could you get? So these are things that I'm going to be discussing tonight. This is a webinar. If you go to the front page of TFNN, you'll see it advertised. It's going to be, it's really about sector rotation. Yet again, from the summer of 2010, we've seen sector rotation hold the general market higher, even though some sectors have really they've taken a beating. But if you have just a couple of really important stocks that can hold a sector up, it means that you have a tremendous sideways time-related consolidation, but you don't break down. You don't have that crash. You don't even have a smash of 12%. That's what I'm going to be discussing tonight. How are we going to approach this particular market? We've already lightened up somewhat on long positions, starting the short positions. We already started the short positions. So in this regard, it's a very important culminating moment in certain areas. Let me go through this. The S&P right now, the future's down 7 at 2465. That made a peak D in the chat. Do I want to do that? Yeah, I do. I must do that because it's part of what the webinar will be about. Let me just show you what I mean by a peak D. A peak D is when, from an identifiable low bar, you merely count each successively higher peak 4 times higher. That means the first peak is a peak A, uppercase. On the way up, we use uppercase letters. And it can go to the second, which is B. The third peak is C, and the fourth is D. It can go all the way to G, and then it recycles. But D is where other things can happen. And you can see not just one, but not just hundreds, but thousands of charts over the years that I've been here. I've shown you what's happened at a peak D. That's just where the yellow light goes on. You've got to do an assessment. You could take some off. You could keep core positions. You could say, D was my objective, I'm done. I know of a subscriber from years ago who used to just trade in a particular sector everything everything in the sector that went to D. He took it from the lows, and if it worked, and he got out at D. And just it was a very nice way of doing it. So D is what we look for. Wait a minute. We went to a peak D. We went to peak D on the 19th of June in the Dow on the E-mini at 2451.50. Had that sharp pullback. It was also Chapman Wave 5. Here we've got a D with a Chapman Wave 5 at 2480 from, this was July the 27th. Yep, July 27th. And we're just pulling back a little bit. We really made a rectangle formation. I can tell you this, until 2456 is taken out on the downside, think of this as choppy sideways consolidation, because that's what's happened before. Take out 2456 on a closing basis, you're looking at something else completely. That implies that the weekly chart doji candle from last week is a leg E with a potential for a peak E. That's the fifth highest peak, and a Chapman Wave 5. Here's a 120-minute chart. It went to an F at 2477, but the last peak was that E. That was an F at 2480.50, the all-time high. Made the rectangle formation, had a Chapman Wave inside buy mode to at least a D. It actually went to a D and then went to an E and an F. Now what we're looking at is a sharp pullback, and 2461 is really what we're looking at in the 120-minute chart as a particular target over the coming few days. All right, let's get out of this 120-minute chart. Now we'll go a little quicker, because I want to do everything before the break. Let's do this. The Dow has the potential here for a Chapman Wave 5. This is not 2198 anymore. It's 22,036. 22,036. Can you believe it? I'll get into something in the next few days. I'll talk about my very long-term projections from way back in 1999. So this is 21,989 right now. Potential to fill these gaps. If you look at the gap, I don't think I have time, so I'll do it this way. You see the gaps here in this. On the left is this daily chart of the Dow. On the right is the same daily chart, but with the MACD and stochastic. MACD is still very strong. That's why I'm saying, just think of this, first of all, one step at a time, as the start of perhaps a consolidation. That's all. Stochastic's at 94%. That's good. On balance volume is hinting that it's a little extended here. But look, you have to fill in 1, 2, 3 gaps down to the 20. Let's call it down to the 21,742 level. And then there's another one all the way down to the 21,400s. So there are a number of gaps. It can take a while to do that. And it could be a rotational correction that we're looking at. Tonight, I'm going to be talking about this very long-term chart right here of the Dow going back to 2003, where there's an uptrend line that became support and then became resistance, and then you didn't even have to look at it. All of a sudden, today, it got hit right there, that green line. So all of this is very important. That's what we'll be talking about tonight. Now, let's go through this quickly. S&P, SPX.X. S&P is down 7 at 2468, made a high of 2484 at what? A peak D. Where's the weekly? Leg D. It'll be a peak D if it doesn't break 2484.04 this week. And you've got a doji candle. I'm always wary of those candles. Leg D in the monthly chart, that's really important. So it's still very positive in the monthly chart. Let's run. Oh, there's the break. That's okay. We've got time. There's no rush. I'll be back. Basil Chapman, Tiger Technicians Hour, preparing for tonight's first webinar of a 2-webinar series. Tonight for an hour and a half. On the 16th for an hour and a half. And in between, you get my daily newsletter with a very comprehensive look at the markets, as well as weekend updates with charts flying your way throughout the weekend. I'll be back straight after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. The S&P's down 6. So this is the cash S&P. You see, basically what I do is this. I look at the chart and say, aha, a Chapman wave Roman candle, and it went into halfway to this little thin wick. This is called the shadow. It actually traded into the shadow and around about the 2468 level and didn't break down. That's usually a sign of at least modest strength. Let's put it that way. So what I would normally do is I'd grab the outer bars, the high of 2484 and the low of about 260. I'd draw a rectangle. And then what I'd say is that within the context of 100 or smaller time frame, what you should get is a Chapman wave buy mode, because the low held, as long as the low holds, you should get a Chapman wave buy mode that takes you in a shorter time frame to at least a D. So this is just off the top of my head. I'm looking at it. I haven't actually looked at this in detail. And what do we get? We get, there's your high that was made. Let me just do this. Give me 1 second. I'll do it live because tonight is going to be all about chart formations and how we can use them or why we want to use them. And here you go, A, B, C, D, E. So it goes to an E in the 120-minute chart, has a huge tumble, comes down to the 2460 level, and then starts again. What? It starts a brand new A, B, C, and this is leg D. So what were we just saying? That I would draw a rectangle, and I would say within the rectangle, if the low holds, I would consider that there's a possibility of an internal Chapman wave buy mode. Implication, it should rally towards exactly to or just a tad above the most recent high that was 2484.04, and then come down, and that's really the test of strength after that. Well, we've just done that, and now the test of strength is it's at 2470. If there's a push anytime today above 2475.75, let's call it 2474, and that's only 4 points higher, then this rectangle formation can hold a little while longer. Okay, so we've done that. Now let's talk about the QQQ series. This is the NDX 100 power shares. Made a peak C. And I've been saying for quite a while now, since we broke above 143.90, the high of the 9th of June, peak G and a Chapman wave 5, and then a 5 to the downside to a trough D. I said it's very unusual for any index to go to an all-time high in the daily without making at least a D. There might be a recycle. It might turn out to be a peak C1, C2, where it just misses by a fraction making that D, but the MACD turns down, the stochastic turns down, everything looks like it should have been a D, so then we call it a peak C1 and a peak C2 with a plus sign above the C2, because you can't put a down arrow because that isn't the high. The high is at C1 level. So all of a sudden, we're looking at the doji candle of last week at a G/C, and that's going to be very important. I'll make it real simple. If the Qs go above 145.96 in the next week, that's going to be really positive, and I'll be able to talk about the rotational aspect, the correctional aspect in much greater detail as a positive. And if there is no close above that level, but instead we close below last week's low in the QQQ series of 142.30, and then I'll talk about a rotational correction where we know exactly what levels to look for, and with a good chance that the correction could go all the way down to the 139, 137 level for the first really big test of strength, and then we go from there. So we got levels that are absolutely clear in many of the aspects that we're looking at. IWM, the Russell 2000, horrible, down at $1.61 at 140.17. Made a peak E, peak D at the last high of 142.90 back on the 9th of June. And the most recent one was 144.25 on the 25th of July. And we're dropping very sharply. Leg, I'm calling this leg F, and I've said for a while, there's no reason why not to call it a leg F in the weekly chart, and a leg D in the monthly. So putting this together, you can see now which is potentially going to be one of the weaker sectors, and which is the sector that has the potential to hold steady at least a little while longer. Let's go to the VIX index, VIX.X. There we go. VIX index running is at 10.40. It's up 31 cents. No great shakes here. It's not telling me anything. If by the end of the day the market drops sharper and it goes to 11, it trades in the 11s, that'll be the first positive action we've seen, because the 8.84 high to the 8.84 all-time low that was made on the 26th of July, and just 2 days later we spiked to 11.50 in the on the 27th. And then we start pulling back, but haven't given it all up and holding the 9-period moving average. I'm going to make a little rectangle here. This action is like the inverse of the rectangle we're looking at in the QQQs. Why? Because now we should have technically had, from the high that was made 11.50 in the VIX index, we should have had, maybe we did in the 120-minute chart, trough A, trough B, trough C, trough D, E, F, and even a G. Yeah, okay, so you got that. You got a Chapman wave sell mode within that rectangle formation. So this is going to be very important, because if it now cancels and starts to break above the high of the day, which is at 10.81, that's going to be very important. I have to tell you, it's just not going to be easy. You just cannot take it for granted that, we made the top, this is it, goodbye, let's just short all the positions and go home. This is the start of a move. That's why this webinar tonight, I wanted 2 weeks to be able to discuss the action and reaction within the markets. For instance, why on earth would you see, how can I don't want to give away my webinar too much. We won't talk about it today. We'll talk about it tomorrow. Most importantly, I wanted to show you the XLE mentioned in the den. Fletch said XLE spike off the low. Well, there is a spike. It's made a peak E, but the MACD, the moving average convergence divergence, is really strong. Stochastics at 80%. It had a chance to break down. So far, it hasn't. So I'm watching the XLE, which is the S&P Select Energy Spider Fund, because this last week was the first time, I spoke about this, last week was the first time in, I'm trying to find it. The first time since it broke down, let's just put it this way, since January, the XLE has not closed. It's spiked above, but it hasn't closed above the 9-period exponential moving average in the weekly chart until last week. And that is a sign to say that there's some life there. And in the rotational aspect, I'll talk about that tonight, what are we going to do? Is there a chance that the energy sector could have a balance of time, maybe not so much in price? Let's look at that SLB, which is Schlumberger. Holding very nicely. A, B, C's leg D to the upside. MACD strong. Stochastics very good at 88%. Weekly chart. Last week was above the 9 EMA for the first time, and this week. So there are some stocks that we're going to be looking at, and maybe we'll take some positions. Even though it's in leg D, it might be worth looking at it in the daily. So that's what my whole thing is about. What is going to be the underlying factor in this particular? It starts off as a 2-week period, but really we're looking at 6 weeks to 8 weeks, because we want to see how does August go into September in terms of correcting excesses, and it might be just 1 or 2 stocks at a time that do the corrections, and a couple of stocks hold those sectors up. I'll be talking about that more when we get back. We want to look at bonds. We want to look at high-grade copper. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 39, S&P's down 5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 49. Now, there are a couple of things I want to do. I had a bunch of questions. I'll try to deal with the questions as I go through the different charts. Had a question in the den, a statement more than a question. The Canadian dollar, a lot of room to bounce, question mark. My BCE Bell of Canada doing well, think it is currency related. Well, look at this. It goes to a peak D in the monthly chart. This is the US dollar, Canadian dollar currency pair. And what happens is it plunges from the 1.468 level back in January of 2016. It just goes straight down in a leg A. And it goes to 1.246. I mean, that is really big. It had a whopping move to the upside, but the speed on the downside was much greater than the upside. Then what it does is, because it came down so quickly, it has a rebound, and rebounds to peak C, which becomes a C minus. Why? Because there was an arch formation, and I drew this in quite some time ago, an arch formation, because formations repeat over and over and over. We'll look at some of those tonight in my webinar. And it goes to a leg B by going slightly lower. What's very important is that there's a left side, right side price time match, which I drew in a long time ago, earlier this year. And I said there's a chance that the Canadian dollar could go, the US dollar currency pair, could go from the 1.2460 level all the way to a peak and then come back down in a left side, right side price time match, which would take it to last month, which is the month number of bars on the left to the number of bars on the right, and what I call my plumb line, the midpoint. And if that's the case, if there's a close underneath the 1.2460 level with this particular pattern, any bounce should fail, but the bounce could be strong enough to get you to some left side peak or moving average of importance. Well, 1.28 is the moving average of importance. So just keeping that in mind, because that's all you can do right now. We haven't got, the week hasn't even, it's only halfway through the week, so we can't talk about the weekly chart as if it's closed. You have got here a leg to the upside that's sort of stalled at a moving average, and this moving average right here, I was asked about it, what is the pink moving average? It is, I think that is the 14, yeah, that's the 14-period moving average right there, and it stopped dead at that moving average, and it is holding the 9-period moving average. MACD is good. I mean, it's turned up. It's not great. It's just turned up, and stochastic is rallying, and that suggests that the USD CAD trading at 1.2546, up 0.008. I hate this. I'm into all those numbers. 0.00083. At this particular point, it's attempting the turnaround. But wait a minute. So is the XLE attempting a turnaround, but it's had a much greater move to the upside. And what I'm trying to point out here is that if you look at what has come down sharply and what has tried to rally, there are different levels of bounce. The TLT, which is the Lehman 20-year T-bond fund, up 39 cents at 125.03, is acting quite well, but it needs to crack the 126.03 high of the 21st of July. If it does that, then I think this stock market is going to suffer a little bit more outflows, because the safety of bonds will be the factor as money comes out of the volatility in stocks. That's really the way I'm looking at it. And until these things happen, because if the H pattern in the weekly was the one we were just looking at in the US Canadian dollar, if that happens, you'll break the 122 support and go 122.50 support and go right to 122.30, the 200-period moving average in an H formation. So this is such an important week for areas we haven't looked at for a long time that could be very important. So let me just go to crude oil. Crude oil right now is at peak C if there's no new high, but the 200-period moving average at 50.32 is acting like a magnet. I'm now going to suggest something that I haven't suggested for quite a while, TRCCI. This is the commodity index. The Thomson Reuters commodity index is actually an equal weighted commodity index, has a little bit of everything, and it's gone to an A, it's gone to a B, and it looks just like the charts we've been looking at that have just failed. And like the crude oil, I'm suggesting to you that the commodity index is finally coming alive. It's got a leg B in the weekly chart. Monthly chart has improved, but I don't even want to talk about that yet. Now, copper, I'll go to the XC in a moment, but first let me just go to copper. Copper is at a peak G, could be an alternate count, but it's holding really well, 2.877. And that's saying to me that maybe the world economies are doing a lot better. If you look at world stock markets, they actually had quite a big improvement. So I'm just looking at copper. I'm saying make it real simple. At 2.877, if there's a break, a close below 2.80, copper will start to decline a little bit deeper. But if as it stands right now, we could, in fact, I'm going to draw this in as an arch formation, as an oval formation. This oval formation could last a little while longer, saying that copper is going to try to hold steady for a little while. Okay, and the other thing that I want to look at was we did TLT. I didn't do TBT, which is the inverse. You'll see this TBT has more of the arch formation. Well, what is that saying? Well, TBT is really instrumental if you're looking at, I'll show this tonight. This is the yields, my triple yield chart, 30-year T-bond yield. Look how low it is. It went to a B and now it's failing. That's the 30-year yield. The 10-year T-note yield didn't even go to a B. It went to an A, and now it's pulling back. I just need to get rid of that. And the 5-year. And look how the 10 and 5 are squeezing together. So I'm going to be watching this real closely because, if we start to see a flattening of the yield curve, then you're looking at a stock market that is capable of having a very severe plunge. Now, just quickly before we go to a break, the wood, that's iShares Timber and Forestry ETF, hasn't gone above the high of July of 53.52. So far, that's a D, but it's holding really well in the upper. It's an upper level up. It's a high level consolidation right now, and G/C in the home builders at 287.12, the Philadelphia housing sector index high of July, the week of the 21st, and now it's at 284, just 3 points lower. It's still holding pretty well. So I'm not going to get, this is a very important week, this August 2nd, because it's going to give you an idea of what could be holding very well. And even though yields are coming down, I'm kind of impressed at the XLF holding. I'm suspecting that it's going to go to 25.33. It did it today. Okay, that's what I showed. I mentioned to my subscribers that the XLF could, in fact, go to a leg D above 25.32. And lo and behold, there it is. Not very strong, but it's there. And the weekly chart is extended as E/C. And it's very interesting because the monthly chart has gone to a leg E. So this is what I'm talking about. Tonight we want to start looking at, in the rotational correction, what could hold very well or actually rally. What just needs a lot of time. Yep, absolutely. I'm going to mention that. It's already for my preparation tonight and for my webinar. I wanted to mention that the regionals, which I thought could hold a little bit better, I've got a feeling I was listening to someone who I thought knew a lot more than me, but now I know they don't. And the KRE, which is the regional S&P bank ETF, SPDR, is really not doing all that well. But the XLF, which has the money center banks, is doing very well. Plus, it's got a few MasterCard, Visa, and American Express. So it's got 5 financials in the Dow. That's another reason why the Dow is holding quite well. Basil Chapman, Tiger Technicians Hour. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, folks, go to the front page of TFN because don't forget you've also got this 3:30 by 3:30 today. If you go to the Facebook page, you'll be able to. I'm wondering how many of us here, hosts at TFN, actually go to have a Facebook page. I don't have a Facebook page, but if you go to Facebook, you'll be able to guess. I think today it's the S&P. Yesterday was the Dow, and today's the S&P. What will be the price of the S&P at the close today? Also, you'll be able to see you'll be able to look at the webinar, what's coming up for me tonight. This two-part webinar. It'll be open to subscribers, but you could be a subscriber for a trial basis for 30 days. Even if you can't get to the webinar tonight, it'll be archived, so you can get to it tomorrow. You can listen to it in your own time. And believe me, the newsletter is what's current, exactly what we're doing. In other words, we've started shorting. One of the shorts today that we just got this morning is down almost 3%. It is up for us. It is down because we shorted it. And so you'll be able to be current. But what's most important is that I want to be going through these different sectors over the coming 2 weeks. We'll be adding and subtracting and doing stuff to our, what I call the portfolio. But most importantly, look at the GDX holding so well. It's gone to a peak D. It had a silent doji the day before yesterday's high of 2309, Chapman Wave silent doji. Today it should have been below 2265, the 9-period exponential moving average. But the MACD is very strong. The stochastics at 86%, and it's refusing to go down. The weekly chart does not look great, but it's holding well. So that's what I wanted to show you. Look, there's that D. Remember, we're talking about the Ds. Hey, wait a minute. We just got a D in the gold, the actual gold index, and it's got a left side, right side price time match that says by the 8th of August, we should be hitting the high of the 14th of 1290.4. I don't know if that's going to work, but that's what's holding it up now. Now, what's really interesting for me is that the stocks have been all over the show in the gold index, the silver and gold stocks. Some have been fabulous, and some have just done nothing, or they've gone down even. So this is a very select type of move. You've got to get the right stock, or you just buy the gold, the GLD, something like that, GLD, which is in a leg alternate count. This is a leg F or alternate count, and the way I'm looking at it, this should go to a G and then start a deeper correction, but it's already turned the 119 level into a 9-period moving average support zone. That's at 120.83, up 18 cents. So I'm looking at this, and I'm beginning to like the weekly chart. I didn't before, but now that it's rated above the 200-period moving average. So if I do this, and I'll do it tonight, TRCCI, we're going back to this, we're going back to the Thomson Reuters, let me squeeze this. There it is. Thomson Reuters equal weight commodity index, weekly chart is improving with a V-shaped turnaround. I like that. But the monthly chart has still got a lot of work to do. So, so what I'm looking at here is that the rotational aspect could have gold in a low-level consolidation. In other words, you get the high-level consolidation where you come off the top, but you're still holding within 2% of the highs, and you're just going sideways, basically. This is like gold is within a few percent. The commodity index right now in the monthly is within a few percent from the all-time high to the low off the bottom. So it's trying to form a base. On the one hand, you can get high-level consolidation that makes resistance very strong, or you can get a low-level base that's starting to make support very important. And that's why I looked at the crude oil and I said, crude oil is acting way better than I expected. It's gone to close to the 200-period moving average. The Thomson Reuters commodity index is acting a lot better. The gold, and especially the GDX, holding very nicely above the 200-period moving average and the 9. So that's what I'm saying, a very select move. If I go, question I had about the IYT, hey, what happened? Oh, IYT. IYT is the transportation. Oh, that's a different transportation index, iShares. I went to the IYT. But I'm looking at this and I'm wondering why I don't have any of my notation. I had it fully notated, ITY. This has to be the one. Don't I look at the IYT, the iShares? Why am I suddenly confused? Because it's completely blank. What happened to all my notation? All right, I'll fix it by tonight. IYT. I always look at the IYT. C, D, A, B, C, D, E. Okay, went to a peak E, pulled back very sharply, holding the 200-period simple moving average. And then the 200-period moving average is at 162. This is a heads up to say the Dow can't do it by itself. Usually you want to have some kind of correlation between the, let's call it the Dow theory, where you get the two coinciding at tops and bottoms. So A, B, C, D, E, F, A. Oh, this is G slash B. Oh, I did it too quickly. I'll have to do it again later. I don't like to do things so quickly. This is the IYT. So just keep in mind that the IYT is the transportation iShares, and that it's at a very sharp Eiffel Tower type, uppercase A, straight up, straight down, move from a peak E top at 175 has gone down to the 164. IYT, I hate this. Sorry if I'm sounding confused. It's just really unusual to lose my notation when I haven't had a breakdown in the electricity, which usually shuts down so quickly that I can't save, and then it messes up some of my charts. All right, so let's just keep it that way. And it's a peak C in the monthly, pulling back. All right, I'm going to be talking tonight about the RTH. The RTH is the Market Vectors Retail ETF. Can Amazon, AMZN, which has pulled back quite sharply from its peak D high in the daily, peak D in the weekly, well, can't say peak, we have to wait until Friday, and only a C, a GSAS-C in the monthly, we're going to know very soon whether or not you can have a Costco continue to rally and a Walmart in the fight of the email, of the internet, because they are doing very nicely here. So I'm going to be discussing that tonight. I'm discussing it in terms of the aspect. This is very important. The aspect of back in the 1980s, when electronic music was becoming very, excuse me. Oh, in the den, someone else who has TradeStation lost his IYT notations. Something's going on. Wow, never had that happen for no reason. All right. So back in the 80s, when electronic music was coming along very strong, there was this whole thing with the Boston Symphony Orchestra and all these orchestras saying, oh my God, electronic music is going to take over. It never did. You now have all different mediums, and the symphony orchestra is still there. In the 2000s, going to the 2010s, the media was having conniptions because newspapers were going to be finished, kaput. No, we've got a mix now of media and other alternate forms of information being transmitted. So that's what's going to happen, as I see it, in the Amazon supertanker thrust icebreaker with new technology. The others will catch up, and you'll have both.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So just a quick question is, in the NDX, the Nikkei, in the NK, the Nikkei 225 continuous contract, am I a bull or a bear on Japanese stocks? You know, I'm looking at certain Japanese stocks. I decided a long time ago I would not do what I used to do back in the 19 whatever it was, where I would start downloading in the old days on Friday as the market closed. I would download, and the thing would stop downloading on Monday morning. All weekend, 24/7, it just kept going to download all the different charts from all around the world, etc. And then I would have them ready for Monday, and I did get questions from clients and all that from different. And then I finally figured out, enough American stocks. I don't have to be around the world. I would actually look at it if I had it. So I'd rather not have it. So all I'm going to say is that the Nikkei right now on the futures market, the continuous contract, holding very well at 20,045. My thinking here is that if it can get to 20,130, it'll have a chance to break out above the high that was made on the 27th of 20,180. But if it takes out, I think it'll take a little time, but if it takes out 19,900 support, which I think it's going to do, then you got to be careful. And if you're looking at SNE, which is Sony took a quite a smack. Oh, that's a G. Yeah, a G in the weekly chart, C in the monthly chart, and A, B. And yeah, I remember looking at this double top in the daily. Not a good session today, but until it breaks Sony at 39.80, down 91 cents, until it closes under 38, I'm just going to watch it. But it could be a perfect short right now. But I don't get into the Japanese stocks very much. But I do want to look at Toyota Motor Company, TM. Sorry, TM. TM is trading now after a peak D, had good earnings, doing nicely. The product line is really very nice. I think Honda actually has a very nice looking line as well, especially the new look for the Civic. All right, so the TM is trading 130.82, down a little bit. Yeah, I think there's some stocks that I'm looking at that are holding quite well. We talked tonight, we were talking about the autos as well, auto companies, and many things. So tonight, looking at the webinar. This is my webinar right here coming up. Basil Chapman presents Can Sector Rotation Buoy the Market into 2018, a two-part webinar series, August the 2nd, 2017, 5 p.m. to 6:30 p.m. and Eastern Time, and August the 16th, 2017, 5 p.m. to 6:30 p.m., presented by TFNN. And we're just going to be I really want to cover a lot of material, because during the every day coming up for the next 2 weeks, I'll be following through for those of you who are not used to my work, and I'll show you exactly what's going on. What's really important for me is you see this chart right here, how the analysis of the very long-term monthly Dow chart, the analysis of this leg C, which is trying to make a peak D, leg D, Chapman Wave 5 in the daily Dow. How does it resolve? How does it resolve with the gaps that were there? Those gaps will be filled, but will they just be filled in a slow motion, taking time? Because you've got the rotation with Apple up quite nicely, taking over from what is Boeing. Boeing had a spectacular move. It just needs a break. So I'm going to be discussing that. I'm also going to be discussing what we are looking at, or we have started shorting, what I think is vulnerable. I'll be discussing just peripherally. I'll go through the VIX, etc., because every day I do that, so I don't want to spend too much time. I'll answer questions, and I'll ask you to email me questions so that I can do it individually. So this is going to be very important. Why? Because Dow at 20,000, if it closes today above 22,020, I have to consider there's a good chance for a high-level consolidation. If it doesn't, and then by Friday's close, we're down at 21,000, under 21,920 on a closing basis, then I have to look at it as if to say, aha, what's going to take the place as money comes out of these stocks? Where will it go? And that's what we're discussing. Hey, thanks for being here. Have a wonderful.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.